All right, mic's coming through. Yep, I can see my audio. Well, good morning, everyone. If you're in Asia time zone, and it's probably quite late or quite early for everyone else. I was trading the Asia Open. I thought I might just give it a bit of a stream. I usually stream either Euro or US during the week, but I thought I'd do a little bit of Hang Seng because it's got a fair amount of volatility. So we've had big up, big down. I don't think there's anything to trade. It looks very exciting on the 5-minute chart. If you look at the 60-minute chart, and if I zoom in, excuse me. So the reason I didn't take a trade on the open is because we're in breakout mode. We're hugging the moving average. This is a bad place to do anything on this time frame. You can see bull bar, bear bar, just zebras all the way along. So if the daily chart's doing that, there's no strong daily traders to move the price up or down. You can see if we go back, you couldn't buy above this bull bar, you couldn't buy above this bull bar, you couldn't buy above this bull bar. The only trades you could take with a stop entry were actually selling below bear bars. You could sell below that, sell below that, sell below that. And that's why I think it's climactic to be long, because at the moment you've got bears short and selling above. So if we, I think in terms of higher time frames, yeah, I think we're going to go higher. It might be there, it might be there. We're above both moving averages. If we go back to the 60-minute chart, so very sideways. Range here, up and down. And the more you zoom in, the kind of more confused you get. I think the key for today's trade was this one. I've been buying in the lows and scalping intraday, so buying around 2,500 and lower, just trying to, everyone's trying to pick a bottom, but what's happening is everyone's scalping. So you can see if a trader buys the close of that bar, they don't get 2 to 1. If they missed that buy and they bought on the open, they scalped out at 1 to 1. If you're bull down here, let's imagine you're buying here. You buy, it pulls back below the low of your bar and comes back to your entry point. Either the close or that high, which is where we are now. So you can see none of the bulls are hanging around for a big swing. And on the other side, you've got bears up here selling. So you put a stop up here, where do you sell? Okay, well, let's imagine you sold the close of this bar. You didn't get 1 to 1. No, so that's not going to work. We go above the high of your bar. So if you sell the close, you get a chance to sell at 50% of the way to your stop, or even up to 2/3. And I think where the market's going to go back down is to the bear signal bar. So traders are not buying with their full position. They're basically closing when they get 1 to 1 as opposed to holding. But we're going to hug this bar, I think. So we should have a buy signal at some point around here, but no rush. If you're a newer trader and you see this, we get very excited. We're like, oh, it's fantastic. I'm going to make 1,000 points. But I think a stronger trader is already in and taking profits, knowing that this is not going to last forever. And very aggressive traders are doing the opposite, which is saying, well, I'm going to have a small stop and a big target, as opposed to the beginner trade, which is, look at this, it's definitely going higher. Not realizing you put a stop all the way down here. Yeah, you've got probability, but your risk reward's upside down. So now we're back in the buy zone, and everyone's glad they didn't buy up here. Can you sell down here? Well, it's a failed breakout. So it's a failed breakout above this, but what's the entry going to look like? If this is a trading range and we're going to flip down, if we're going to flip down here, then this is a swing sell location, but the bears here are trying to get down here. Oh, morning, Richard. How are you, mate? I wasn't sure whether the regular team would join, but I thought, you know what? It's going to be daylight savings soon, so I'll probably stream more Asia and Euro than US. I'm not as entertaining, I think, at 11 o'clock at night. So anyway, thanks for joining. Do you trade, what do you trade, Hong Kong, or you trade Nikkei, Aussie? I don't think Nifty's open yet. What do bears need to do? Well, bears need to break this, pull back. You can also look at it the other way. You can say, well, this is a bull spike. So that was the other sell here. And these bears are going for a reversal on the open. They probably want to go somewhere down there. Get rid of that. Yeah, mate, I was done. I was done by 11. So I just traded the open. I tried for a swing. It didn't work. A couple of scalps and then just got out of there. And I was pretty happy about it because the day was incredibly sideways. You know, sometimes I go to bed and it's just been this monster trend. I was like, oh no, I should have stayed up. But yeah, it's just mayhem. And good reason too. Like if you look on the daily chart, that was always going to happen. You've got a weak buy signal that gets 1-to-1. You've got a bear, a weak sell. Traders have to sell above to get out. You've also got traders who bought up here, trying to buy the moving average to get back. Disappointed. It's just a lot of disappointed, to me anyway, a lot of disappointed 60-minute traders. And you've got no buy signals on the 60-minute chart. These guys got stuck. They had to buy there to get out. Like it was just, there's just no strong bulls. So you just fade them all day. Oh, you're in Sydney? Yeah, nice one. We're in Sydney. I lived in Sydney for many years. Actually gonna head back there Christmas time. Nice, get a few trades on before work. Well done. We used to do the same thing. So 60-minute chart's about to close, and regardless of what this bar looks like, that's not a good bar to do anything on the 60-minute chart. Failed breakout on the 15-minute. Might just wait here. I'm sure the bears would love a strong swing down, but it's a bull channel. So that would be an all-day thing. More likely, I think it's probably buyers down here. Other way to look at it, you've got bulls trapped up here. Bulls trapped here. Bulls not trapped there. I think if you bought there and that came back, you need to get out. But we've definitely got trapped bulls above. And we've got new bears selling down here. Nice one. Good on North Sydney. Yes, when I had my accounting and consulting business, I used to travel around a lot, but office was in Surrey Hills. I had many clients North City, many clients Para. Had some manufacturing guys out at Penrith, and even Smeaton Grange, Campbelltown and stuff. So used to knock up quite a few tolls. Oh, good one. Yeah, mate, the old accountants. Tell you what, I used to trade stocks by reading P&L balance sheet cash flows, and I'm much better at it using price action. So. Which my accounting friends just think is totally wrong. They're like, no, balance sheet's everything. I'm like, nah, not really. What do you do here? Do you buy at the low? I mean, you've got an incredibly small stop. 50-point stop. Well, if it's 3-1, probability is pretty low. Turn that thing off. Symbol time, that can disappear. Okay. Well, bulls are going to buy low because, you know, stop small, probability's low. Bears have sold here and not got great follow through. But anyone who's selling here is not scalping. They're like, yep, we're going to break through all of this. Bears had their first sell above a bear bar. So if you're in a bull trend and you see a bear spike, would you exit your long position, medium, wait to see what happens next? Can you show me a chart? If you point it out on a chart, I'll talk through it. It's a good question. So if this is a bull channel, you can see we need to go above prior highs and pull back. So if that's a trading range, we broke above it, tested the swing entry, 2-1, stop down there. Okay, so Everyone's happy there. Okay, so that's not a buy signal on the 5 minute. If I was a bear and I sold here, and this is my follow through, there's an argument that says you're staying because it's a bear bar. But you really want that new low so that you're selling a pullback in something bearish. At the moment, we're in something bullish still. So, yeah, broke out of that range, and then here's a bear spike. We broke out of that range. Coming into the session, this is the most important signal bar. So I have a video on my channel called Yesterday Signal Bars Live. And it's just saying that on the open, while everyone's waiting for information, there's already information on the chart, which is traders are long from here, they're short from up here. And those entry points, you know, the close, the high, the low, I think are really useful magnets. So at the moment, if you were long buying the close of this bar, we have not gone below your bar. So if I put that on the chart there, we have not gone below your bar. So you're long and you've watched this form, you're like, okay, that's weird, but whatever. There's no real management to do yet. And for this trader, if you've bought here, well, we're not even back at your entry yet, so there's nothing for you to do either. So that's why I'm not in a big rush. I prefer one of those information points to get hit. UKX 5 minute bar 29. Thank you very much, sir. Man, I get asked a lot of questions, and whenever I say, hey, you know, just send me a chart, most people go silent. So I really appreciate you just sending me a chart. I don't know why people are afraid of doing that, but maybe they think they're going to get it wrong or whatever. It's like just much easier to talk about a chart. 29. Oh, that's a 10 minute. Sorry. Okay, we're back. 27, 28, 29. Okay, so what you're saying is you're long here. Okay, so you're long here. And then you see this. So usually when you take a reasonable trade with a stop in the right place, the flip will give you your money back. You were short. How can you get short on 29? 29's a bull bar. Yeah, so just tell me entry, exit. Okay, so you're short. Okay, so you're short below 25. Okay, nice. So you're short below 25. Okay, so you probably need to stop somewhere up here, maybe that bear spike somewhere there. So you sell there, you got to stop up there. You might have another position to scale in. You get a spike that comes back up into your signal bar, but never goes above your signal bar, right? This is your entry bar. Your entry bar is awesome. Happy days. We never come back up to break the high of your signal bar. So at this point, there's no decision for me to make other than if now I've got 3 bull bars closing on their highs, this needs a second leg up. So you're either short, you rely on your stop, you exit and you wait to sell again, so then you sell below 33. Or I think what a lot of traders do is this: if I'm short below 25, I'll look to scale in 50% of the way to my stop, or 2/3 of the way up to my stop. Because if I've taken a high probability trade, sorry, let's just measure that. So there should be a chance, and we never really got back into that that zone, so you're okay. If you take that trade and then you're going to reverse after 2 bars here, either the size might be wrong or the expectation of that trade might be off. Because that's a swing sell. It's a spike, 2-leg pullback, like it's a low 2 sell. And your target is basically to take the stops out down here. Or if you're a swing trader, you know, you wait for a couple of legs and then get out above a bull bar. Does that make sense? So only get out if you can get back in. So let's say you get out, you don't sell 33 because it's an inside bar, but then you get strong bear bar closing on its low, then you're short below that. But you don't switch to long. If anything, if you're convinced of short, you switch to trading range, but you don't switch to long. So the longs only to exit. So we've got a bear spike and then a sell signal. So bears are trying to get a sell down here. Lots of tails. G'day Luke. Isaac Harris, what are some trades as of right now to purchase and hold? Well, we're coming into a recession. Sorry, we're coming into a recession, but we're also coming into an election in about a week's time. So I would hold off on any new decisions. Pretty sure institutions, hedge funds, everyone's going to be taking risk off just in case there's kind of shenanigans coming into the election. So yeah, as of right now, you know, you just leave everything where it is, or if you want to reduce risk, but I wouldn't take any new. Yeah, no worries. That's probably not the answer you wanted. You probably wanted some specific stock, but I would just wait. Thing is, the market prices all this stuff in first, but if you look at big news, I think people will be quick to take risk off. I'd like to do some more Asia sessions because, you know, there's a lot of people that have done the Brooks Trading course who are in the live trading room or download the seminars, but it'd be good if we could do some live streaming for Euro or Asia. I think it's handy to be able to ask traders questions and get an answer when you're looking at it. So, what do you do here? Well, same situation here. You know, if you're short below that bear bar on a failed breakout, it's pretty aggressive. 5 strong bull bars closing on their highs, which has gone up like 300 or 400 points. But the sell worked. Another trader waits for consecutive bear bars. They sell. We're back at their entry, so I think the trades. Do we get a new low? 670. No, so it's an equal low. So if this is a bull bar and I was short, I'd get out of my short position. There is a possibility to buy. It's still low probability, but that might be a 15-minute buy signal. I don't know, 30 seconds if it's going to do whatever it wants it to do. It's kind of the same sitch. If that's the lower high, it's probably no rush. If that's the lower high and we haven't taken it out, then we just wait. So consecutive bull bars, but tails, so I might just let it go back to the moving average. And if I need to buy small, okay, so now we've just gone above that high. Now is this going to take off like a rocket ship, or is it just going to go back to its normal behavior? So that's a super common price action behavior. So bears are short, selling below things. They get a chance to sell above things. So those traders are still short. So rather than us buying above there, which is the aggressive long, you just wait for it to look above. And now I'm waiting to see what bears are doing. At the moment, it's a double bottom. Is there an argument to just stop swing trading and just saying, you know, swing trading, by swing trading I mean, you know, you buy, put a stop there, going for 2 to 1. Should we just stay trading range trading, looking for, you know, buying below bull bars, selling above bear bars? There's probably an argument for that. To get long, bull spike, pull back, you need a buy signal. I mean, that's really the high one from this, but it's a pretty average looking high one because the high one's all the way back down at the bottom of the spike. Usually you want a high one up here, you know. You want a spike, pull back, high one, up, high one. So if you're short below this bear bar here, we haven't put you under a lot of stress. So if you're a bull, you want this to flip, you want to go up here. You know, you're buying really low, hoping for it to go up. I don't think there's any rush. One thing that's not easy about trading is that when you see all this, you get very excited and you want to just, oh, I'll just buy up there and scale in. But price action here is aggressive and a lot of points. The price action here is sideways and very few points. And so a loss here is going to take all day to get back. Bears want a bear bar here for the sell signal. It's not a sell signal on the 60 minute. So that's not a good place to sell within a bull bar. The 15-minute sell is up here. It's 15-minute sell. So what do they need? They need... Okay, they got 1-to-1 if they sold the close. Okay. Okay. Interesting. Let's get rid of that. So 3 bull bars, that's good. We haven't actually closed above the high of these bars, so it's not a buy above. I think I'll just wait. The reason I pay attention to that is because on a lower time frame, this is a channel. And the best place to buy in the channel is along that midline. Like if we zoom in. So we're in this channel, so we break out. So rather than buying at the high, you see a breakout, pull back, and then you buy underneath somewhere, which gives you a good chance of getting out. If it flips down, it'll come back and let you out. Okay, so we went above it once, went above it a second time. Okay, so we've broken above. Let's see if we can stay above there. I want to buy below something. Okay, so bull's got 1-to-1. Trading ranges are annoying because they don't usually follow the regular behavior of market tests the price, pulls back, and then lets you enter. Sometimes it just races up, which looks like that's what it's doing now. Okay, so if you bought the close of that 15-minute bar, you got 1-to-1. So now we've got a range. Let's see if we can buy a little bit lower. So higher time frame signals 1 down here. All right, we're just pulling back into very strong signal bars. If they bought the low, will they get out at their signal bar up here? Maybe. I mean, that's what we're going to see up here. Okay, so good 5-minute bar. So maybe we can buy, pull back to a breakout point, buy below something. I'm trying to avoid buying the top or selling the bottom of a triangle. So you can see this shape. So triangles form when you have a really good signal bar that fails, it goes all the way back down, you have to scale in, and then they get back out at their first entry. So new traders buy, and then we're seeing if the old traders get out. We'll see what happens when it crosses this line. I prefer to be long a bigger position, but whatever. Best scenario would be this aggressive buying is what's to come here. Okay, well the bulls got 2-to-1, stop below the low, buy the close, so that's good. So I want to add a more of a position, but sometimes you just don't get what you want. If this is going to be a triangle, we'll probably let out bears who sold as well. So I'd like to get back up to here. There's probably higher time frame traders who are looking for 21,000 and big round numbers. But when I've been doing that the last couple of weeks, I've taken part of my position off trading, regular price action like I do, and the swing trading of going for big round numbers, it's just not as reliable. It sounds easy, it sounds logical, but when you look back at the chart, you're like, nah, just trade the bars. It doesn't matter that it's 100 points below 21,000. A double top's a double top. Second entry short and you're long, probably better to get out. Okay, so that is good for bulls. If this is a trading range here, after my big chat about 21,000, that actually sets a possible range up there. Break, pull back. So this is what happens in the triangle. Everyone's trading the breakout, hoping for a pullback and go higher, but the pullback becomes deep and they get disappointed. So we're going to see here. But by entering this pattern small, because the pullbacks are deep, right? This pullback's basically 100%. G'day, Ray. I mean, the mic's where it usually is. Can you turn your volume up? The mic's right next to my face. Any closer, it's going to be blocking the screen. I can talk louder. So we're in a bull channel on the 15-minute chart. That's why I've got these channel lines. And in a channel, you're looking for high twos. This high two, the second entry buy signal, is going to be very high. So wouldn't be surprised if it pulls back if it's going to set up. Traders like buying the high two. They want the high two low. So possible places to test. I think the market needs to test the buy above this bull bar, the close of this bull bar, and the gap fill. So you've got a gap below that bar, so I think, sorry, and the close. So consecutive bull bars above the moving average, so back to always in long, but always in long in a trading range. So thanks for watching my content. Yeah, cheers. I'm not the best at OBS. I'm using streaming software. It's a bit of a, I'm not trying to make excuses. I'm trying to multitask trading, streaming, and OBS. But I appreciate the comment. I'll take a look after the stream. I'll probably click something off. If I change that, does that do anything? Just picking random sliders now. Okay, so good 15-minute bull bar here. So the bears had a sell signal, and I think it makes sense for them to get a chance to get out in a perfect world. But it's better if they don't. So better to be long rather than flat. I was only able to take a small position. I was kind of mucking around in here, waiting for a chance to buy. So we broke above the high, but only by one tick. We didn't get down to 50% of this smaller range. Then we had a breakout, didn't come back and test. So we might get another chance to add on. Starting to have that triangle shape. Oh, thanks, Mauro. Yeah, appreciate it. Yeah, I'll take a look. There's a lot of settings on this screen where I've got the streaming software. I think, not sure if Richard's still on the stream, but Richard was talking about a sell. You know, you take a sell and then you have an opposite spike. What often happens is these traders will judge or manage this trade based on when they get back into this bar. And if they're not happy with this, that will be their exit break-even point. Other traders who sell kind of counter trend, you know, we're in a higher time frame bull channel, that sell will have more positions to sell above, or it's a little bit more flexible in the way they manage it. Less like, you know, those common YouTube videos that say, this is the ultimate setup and it, you know, works 99% of the time. My experience with professional traders, and certainly my own trading, is that, you know, no one knows what the next bar is. You just got to manage what happens. And if you can trade small and go into the trade saying, okay, well, if I don't get what I want, how can I get out break even? Aim to get out break even. You'll find that'll reduce a lot of stress in your trading, because you're less worried about, oh, the moment I enter, oh, it goes against me and I take a loss. Well, anyone buying up here is trading incredibly small. Stops down here. What they would really like is to buy down here, get back to their midpoint. But these traders were not able to buy one tick below that low. Hang Seng has a lunch break as well, which is very nice of them. So it's kind of like 2 trading sessions. I don't typically do too much in the afternoon session. I like to have a break because I enjoy trading Euro, which is, 2, 3, 4 p.m. open, depending on the time, the particular month of the year. So it's a weak reversal signal. What I mean is no one wants to sell 1 tick below the low of that bar, and it's not a great sell to close. So you can see as soon as that bar closed, there were way more traders just saying, okay, well, we're still probably going to go higher, at least above the high of that bar. So now these traders who sold are under stress. I mean, if you sell and there's 6 bars sideways, they probably get up. The traders that sold here now want to sell high or sell above the high of their bar to get back to make a profit on that entry. If they can't, they want it to go up and come back to their midpoint. And that's why gaps are so important, because as long as gaps are open, traders can't do that. So if you think the trader sells here or here or here, there's no way for them to scale in and avoid a loss. And the result is this. So whenever there's gaps present, I won't fade the trend. So if a trader buys here, puts a stop at the low, they're one-to-one targets running the stops of those bears. A trader can buy above that bar. I'm trying to get an early warning of, are we just going to collapse back into a triangle, or are we actually going to run stops? And I mean, this would be good if it flips up. If this whole bear spike flips up, then happy days. And there might be some traders who are looking at that swing possibility. So they're saying, okay, if that spike breaks and we do a measured move, then the one-to-one would be there, wait for a buy, pull back buying there for one-to-one, or it's a swing buy somewhere around here. But because it's a trading range, usually these long, far away measured moves are far away. What does everyone else trade in Asia session? I can look at Nikkei. I can look at. I mean, I'm from Australia. I don't trade the Aussie index too much. I find Nikkei and Hang Seng move in a way I can trade a little bit better. Okay, so bulls have got 5 minutes here to get a 15-minute follow through. If it's going to be a trading range, they ain't going to get it. This is starting to do triangle kind of stuff now. I might get out back at this line. Maybe I'll give it... yeah, I might get out at that line if we get back up there. And then if the 15-minute closes in a good way, I'll look to get back in. I don't want to be stuck in a triangle for the next hour. Okay, is that going to fill me? Okay, so it's just taking me out. Okay, so not a huge trade, but at least paid for lunch. So the logic of that trade is good signal bar in a trading range environment. What I want is traders in front of me to buy and hold, but you can see here the difference between the buy on this bar and the buy on this bar. When this bar closed, everyone was happy. Yay, let's get long. When this bar closed, man, there were more bears selling. And it's a good place to sell. You're selling in the top of a trading range. We're probably going to get back into this zone. So you've actually got a 50-50 shot. If we come back to my entry bar and let these bears out and we get another buy signal here, then that's a different story. I'll get back in. So if it goes, it's going without me. Alternatively, it doesn't come back. We get a new high of the day in a pullback. Then that's a buy for up here. I've just got an indicator here. It's just telling me the average bar range at the moment, about 50 points. So me closing at 61 points is not, it's not the worst thing in the world. It's just scalping a bar range, which is okay. You know, you look for high probability to get one bar in your direction, but I would prefer to have a swing trade on and then scalp. That's usually a better way to do it. Otherwise, you take little bits out of a big move. Okay, so we've closed that gap. If a trader bought the close of this bar, 4 bull bars, that's an okay thing to do. Buy above it, that's also an okay thing to do. So in 30 seconds, can the bulls close a strong bull bar above that price? Looks like they can. Okay, that's looking better for a swing long. Okay, good. Buy signal up here, so we're just going to test and see where those bulls are going to stay in. But this is good swing stuff here. So bears are now stuck here. So they're going to sell more at that high and try to get back to their midpoint, which is about there. So I'll get rid of that, get rid of that, get rid of that. hopefully that midpoint will also give us a chance at least to have a shot at a bigger swing. And if that's a bear bar triggers, then there's a good chance we can get out of it without too much damage. I mean, there's absolutely no way for me to tell what traders are thinking or doing, but I can judge by how bars are closing, what the price action is doing, whether I would enter or exit. And so I kind of play an imaginary game. If I was short here, what would I do? Well, if I was short here and I've had this against me, I need to get out of this trade. So I'm either panicking exit, panic exit up here, or I really want to get back to my midpoint, back to my close, and not sell again. If I'm a 15-minute bull on that high too, and I didn't buy it, and there was follow through, I want to get back to this same price to participate. I'm one of them, because I just got out at that price. It'd be better if it breaks something. The high of that bar is 867, and we are... Okay, so we got back to their price. I don't know whether they would have gone filled. Let's see. In terms of higher time frames, so Hang Seng was in a bear channel, broke a swing low, went down to test the bottom of that channel, and then traders are buying it for a swing up. So, you take any kind of trading range down the bottom, and traders are looking to flip it to the upside. And this was a huge move on the monthly and the weekly chart. You can see we've got a huge amount of buying pressure. So if you just select that last trading range here, you can see traders were buying at the lows here, betting we'd not only break out, but we'd get a measured move, and they got it. And if traders are doing that, that means they're buying and scaling in lower, betting on high prices. We go to the daily chart, and this is what traders want to participate in. So everyone's been having a couple of goes at it over the last few weeks, trying to buy, hoping it's the big swing up, have to scale in lower, get out disappointed. So all through here, that's what I've been doing. You buy, it works, or you buy, you scale in lower, you get out, so you get a profit on your second entry. If you look at in terms of swing points, that's the last bear swing point that got broken, because that's the new low that got taken out. Now that there's no more swing bears at this area, the only place for long-term bears is somewhere up here. So traders are buying low, betting on taking out those stops. Okay, so consecutive bull bars on the 15-minute chart, that's good. You see we're going to get back to the break-even point of those bears. The bears would love to get back down to here. They don't have a sell signal for a new short, so I think the only traders that are selling here are existing bears, adding to their position, trying to manage out. I think if you're still long and you get a big bear bar, okay to exit and then just wait for another chance to buy. In my view, at least, no bears had to sell above. So it's really just a sell the close. Can you sell here for a double top? Well, trading range is really 50-50. So, and the only place you want to enter is in the top or bottom of that trading range. If the bears had gotten a new low, then I would say fantastic, great place for a short. But we have a double bottom, which means no bulls got stopped out. I might just check. So on the cash index, they got stopped out, but on the futures they didn't. So isn't that interesting? You see that's the highest buy, what I call the highest high one. So, you know, we've all been there, we'll continue to be there, where we take the highest buy and the lowest sell. But because it was reasonable to do that and scale in lower, as soon as we hit that, we reverse. So now they've been let out. So that's a warning saying that a lot of this new buying was actually tracked bulls here. And this is a common thing I do most days. So I'll miss a lot of initial moves doing this strategy, but it suits my personality. Maybe it'll suit yours or not. And that is, rather than chase the first move, hoping it's the move of the day, I'll wait for the first move to play out, see who's stuck, and then I structure a trade based on the locations I think they're stuck. So that was up here. I thought bears were stuck here. So I've got a buy signal where they took their sell. If I was short there and I've got this, hey, I want to get out of that sell. If that was the world's best sell, we shouldn't be back here. So strong. I don't want bears to get all the way down here if I'm a bull, because that means you can sell higher and bears are making money. So I don't want that if I'm a bull. If I'm a bear, I need a sell signal. I don't want to sell in the middle of the range. Bears got stuck here. I don't want to jump in when they're getting out. So we might need to go sideways. Might sound confusing if you haven't done the books trading course, but once you get used to reading it bar by bar, it kind of filters out, well, it doesn't kind of, it filters out a lot of bad trades. So, and then it just continues. So now you've got bulls that bought above this bull bar, and so we probably need to come back up there to let them out. So some traders will just buy the close here, betting that we're just going to get back up there. So traders will buy here and then exit, I don't know, 15 close, 15 high, that kind of area. But it's a very small scalp. you're taking the high probability trade, but that means wide stop, small profit target. So when you lose, it's going to be larger in comparison. Can you sell below that bear bar? Well, you've got to stop. You don't have a new low, so you've got to use the high of the day. You're selling in the middle of the range for a test at the bottom of the range, selling a close. No, I don't think so. I think that's a bad idea. So far, 2 minutes into the bar, not a lot of traders wanting to sell below it. If I wanted to sell, where would I sell? Same thing, just follow the same process. So a bull gets stuck, we go down, we come back. Wherever they want to exit, I want to become a bear. Hi Shingo, thanks for jumping on. We're just trading Hang Seng, so we're long in here, got out at the top of the range and just looking for the next trade. I said there was a high chance that we just form a triangle if the pullbacks are deep, and that means kind of ricocheting through this kind of shape. So bulls get stuck, they buy lower, they get out. Bears get stuck, they sell higher, they get out, and we just oscillate around this midpoint. Bears really need to get to this red line. Which they have done on the cash, because I've got the cash index. Oh no, okay. Whatever. Okay, bears also want to get to this gap. There's another gap down there. Let's get rid of some of these lines. Make it a bit easier to see stuff. I still think we'll get back to that 15-minute close. So you got consecutive bear bars sitting on the moving average. Did they get out? Low 778. Low. Equal lows. Okay, so potentially they have a chance to get out. If you're a new bear, can you sell there? Well, I think you still got to use the same stop. Good 15-minute bear bar. So you can see we break out to a new high, gap close, breakout, gap close. So trading range behavior, It usually benefits traders that fade bars. So in a trading range, in a trending environment, you buy a good-looking bull bar, it goes higher. In a trading range environment, traders often exit on those signal bars. So it's like wherever you enter, you come back to. So it's generally better not to use a full position for your first position anyway. Okay, so those bears who sold have definitely got filled. If you're a new bear, oh, nice one, Shingo. Trading gold, silver on the 30-minute. So we've got a bull inside bar on the 60-minute chart. So not a great place to buy the close of this chart. If this sell signal was higher and didn't have the moving average so close, then it's a reasonable scalp. You sell higher, betting we're probably just going to go sideways. We're back at the entry point for these bulls. Let's see what happens. So there's no gaps above. This is the only gap below, so bears are probably selling to close this gap. Might see if I can buy it. Is this some kind of a wedge? 1, 2, 3. It's a funny looking wedge. But it's triggered, so we'll see whether they get the entry bar. Okay, so 3 bear bars. If you bought this bull bar and you bought below, you kind of wanted to get back to your break even. If you bought this bull bar, you're back at your entry. So now we're back at the reasonable sell, the reasonable buy. We're trying to work out who's going to win. Where'd all the bulls go? On my trading terminal, I got filled on my gap close, but on trading view, the gap's very large, so. It's not a big position anyway, so. If the bears get strong follow through, I'll probably just exit break even. So. Oh, Ray, sorry, I didn't see a question. If this bar closes strongly bullish, is it a spike, pullback, continuation? So I missed when that was. You probably hear. Bar count. Do you mean this bull bar up here? Ah, 139. Yeah, if that was a bull bar, absolutely. Spike, pullback, and then buy signal above. And the same strategy, you'd buy with a small size. You know, you want it to launch up, but it might make a second buy signal. So if I think it's a trading range, I'll just assume no matter how good, my first entry is just not going to pan out. And that stops me getting upset. The alternative is you buy here, oh no, you know, sell here, buy here, you know, and you can just do it every time you enter. You get frustrated. Did that for many years, many years. Okay, so 4 bear bars, tails, we're down in the low of a trading range. So you can see, like Ray just said, you know, it was very bullish up here. All of a sudden, oh, okay, now we've got lots of bear bars. So it kind of sucks you in to trading at the extremes. I think a better approach is to keep your trading range mindset, which looks like this. No matter how bullish it looks up here, you can only take a small position because you're basically betting that you can buy 50% of the way to your stop or 2/3, and you're going to add more size down here. You get stopped out, whatever. But then for you to get stopped out, we've broken out of this range. So you're getting new information. These traders took a sell signal on the 15-minute chart. And what's likely to happen to them is we're going to go back against their entry. So if we just start going down all the way here, then that's new information. The trading range might be finishing. So not super exciting price action. There was a chance. I think we said around here, traders were buying, waiting for a signal bar. It rocketed off. And I said, if we just shoot off and traders can't get the signal bar they want low, we might just form a triangle. We go all the way up, they exit, we go all the way down, they exit until someone gets stopped out. At the moment, you can be long with a stop down here, you can be short with a stop up there, and everyone's in. And that's why we're kind of just oscillating in the middle here. We drift down, we drift up. We need someone new to get stuck. I think we're going to let these bulls out up here, but you know, it doesn't mean we can't spend 2 hours down here, that's for sure. So I took a small position long at this gap on my trading terminal. I got filled, you know, by 1 point. It's not very scientific. It's more saying, well, around this gap, I want an order. I needed to go through my order to get filled. So if I put it 1 tick above or 2 ticks above, there's a chance I might miss it. So I think the low is 51, the high is 47. So what's that? You know, 4 points above it. Not scientific. I'm basically trading against the expectations of new bears here. Okay, so now we've closed the gap on whichever data feed this one is. It says HKEX, but I'm sure there's a few of them. Can you wait for a low one short here since 4 consecutive bear bars? Yeah, I mean, it's getting a lot of bear bars. There's a lot of bear bars here. There's more bear bars here for a pullback. So now consecutive bear bars on the 15-minute chart. So you could say, you know, you can argue wedge, basically 3 reversal attempts. I think as long as the pullback doesn't create a better looking buy signal, you're probably okay. But you're also low in a trading range. So you're going to sell, and you've got to expect this. You sell, and you have to wait all of this to sell again. For me to get out of my long, this would have to be a big bear bar down and a pullback, and then I'll get out break even and say, okay, maybe I'm doing the wrong thing. It looks like the bulls want to buy under these bull bars here. So you had a bull spike and then you had a pullback. We went below that low here. New bull bar. So technically you could be a bull buying up there. But in a trading range, you basically get 1 bar. Not all the time. A lot of the time. You get this 1 bar, which is like, it closed back at your entry. So you basically just hit exit trade. You need to get out on disappointment. If you're a bear and you sold that bear bar, your 1-to-1's down here. which is probably a good place for a scale in. It's like you see that on the open, and if you get this strong bias that you need to get long, oh, you panic out, and you're like, no, now it's going to start now. Okay, I need to get long, and then, oh, now we're back down. So I think you just got to take a lot of losses doing this before you stop doing it. Okay, so we got down to the low of this bull signal bar. Okay, so if you're a bull and you bought here, looks like a lot of those traders took 1R. So we need someone to get stuck. Okay, that's good for bears. So they got 1R, so looks like it's shifting. Now bears are trying to do the opposite. They kind of flipped this range down. Now they want to flip, this whole spike, probably that bull bar. Well, it looks like my gap close trade failed, didn't it? Okay, so 6 consecutive bear bars. You've got strong reversal here, setting up on the 60-minute chart. We've had a couple of strong 15-minute bear bars. Bears really want to break this low. Maybe break low, pull back, and then go down for a swing. But trading range price action, you're selling down here, your stop's up there, you're doing the same thing that everyone's been getting caught at. So let's see. Oh, I thought there'd be more bulls there. Okay, so I just got stopped out. Okay, so new low of the day. So all the bulls that had stops here got taken out. We're back at the lows of these 60-minute bars. But anyone who's buying and scaling in, they're scaling in to get out of an earlier position. So new high, that's where the bull stop is. We just ran it. So I think any move up here is more likely to be a pullback in a trading range as opposed to finding new swing bulls. You're selling below an inside bar on the 60-minute chart, which is not, which I don't think is a good idea. In hindsight, it's probably better to buy there and then scale in at the low. So we've got 6 bear bars closing on their lows. We're back at the 200. So we're at these higher time frame signal bars. We're at the lows of these bull bars. I think there's high time frame traders that might buy here, but now the bears have got a new low. Any 5-minute bulls are stopped out, or anyone that's scaling in, buying and buying lower, is betting on a trading range and not a swing. So the sell, that bear bar, even though you had to sit through this, they did eventually get 1R. And if you sold the close, you sold below this bar, then you also got 1R. Well done. If this is a strong bull bar, will traders buy above it? Well, traders that are trading this trading range, that's a lot of T's, will buy it and scale in lower, betting that they can make money because the bears had a hard time selling below here. So some traders would just buy above that, betting that if they keep scaling in. I think also now the bears got a new low, they're waiting for a pullback and a sell signal to get short. So that same logic that will have you, buying and just, scaling in constantly, you could be buying in what is becoming a bear spike. So other traders will wait for a second entry. Classic trading range stuff. Well, what I might do, it's coming up to 11:30. I might wrap the stream up there. So thanks very much for joining in. I was just kind of trialing out, getting the software set up for Asia. But appreciate everyone being on the stream. And thanks very much, Shingo. Thanks, guys. Did I scale in below? No, I bought there. In hindsight, I should have just had a scale in there, but I just thought if we're going to have a gap close, we'll just touch here, touch there. But when we broke through, then it's doing something different to what I expected, so I'll just take the loss. Thanks, guys. But yeah, if this is going to continue in a trading range, then I don't really want to sell at the lows. I want to break the lows and have a sell signal and keep going. So, all right, I'll catch you guys for Euro, or I'm in the trading room, the Brooks trading room later on for US. So otherwise, I'll catch you then. Otherwise, see you later in the week. Cheers, everyone.